Earlier in the program, David Bollock sat down with Neil Melancon on the recent USDA Supply and Demand report. Neil now joins us with this week's Bottom Line. And Neil, I know David touched on some of the outside market conditions that were going on, but that probably has a lot to do with what's going on in the grain market right now. Let's elaborate a little more on what you guys talked about.
All right, the big thing is that these outside markets are really the key to understanding this whole thing. It seems like the last two reports have just been completely ignored. Both in October and now in November, the results from the reports were quickly overshadowed by other factors. Last month due to the rainy Midwest weather, and this month due to the outside markets. First up though, let's take a look at the grain numbers. As David mentioned, corn dropped a little from the last report, down to 12.92 billion bushels from an average yield of about 162.9. That's bushels per acre. This is down from the October report, but much higher than last year. Beans, meanwhile, gained a little ground from October. Beans are around 3.3 billion bushels, up almost 100 million bushels from an average yield estimate of 43.3. Now here in Louisiana, we mirrored the national trends. Corn was slightly down from last month with an estimated 130 bushels per acre, while soybeans remained about the same with the average yield around 37 bushels per acre. Now the bottom line here this week is that the U.S. dollar is key to understanding this. Midweek last week, we saw it plunge below support levels that brought it down below 75 points, lower than it's been all year. In the short term, this has been positive for the grains like I talked about with David, as the lower dollar means U.S. grains are more attractive to foreign buyers. Long term, it's bad for oil prices as it's buoying them up at a time when demand for oil is bottoming out. Oil prices are higher now than they were over the summer, Mike, when it was at its peak demand.
And Neil, I guess looking at the report, while we have a pretty bad soybean crop right now in the state, at least it looks pretty good across the U.S. for all the other soybean growers.
It does. It really does. And, the key thing that I'm worried about is with this weaker dollar is how much are we, the consumers, going to be able to buy, in the coming months, because that weaker dollar may mean higher prices, but that's not only higher prices for us, but that weaker dollar means we're spending even more.
And with the holiday season just around the corner, we're all going to be spending a little more.
I think so.
Neil Melancon, thanks.